Well, Rob Black is here now to answer your email questions, and the first one is this. Is dollar cost averaging dead? That question comes from Darren. First, explain what dollar cost averaging is.
Dollar cost averaging is, say, when you're 20, 30, or 40 years old, you invest in your 401k or your 403b or your 457 every 2 weeks. Okay. You dollar cost average the market. So sometimes the market's up, you pay a high price. Sometimes the market's low, you get a cheaper price. And you're accumulating assets. In 10, 20, 30, 40 years, it should accumulate wealth nicely. Does that make sense?
Yeah. Is it dead?
A lot of people think it is.
Why?
Because 10 years ago, we were where we are now in the markets, so a lot of people are frustrated. But investing is really a 20, 30, 40-year game and not just a 10. We've never had a period of time where we've gone 20, 30, or 40 years without going up. We have now had a second time in history where we've gone 10 years going sideways. So a lot of people who sell newsletters, a lot of people who want to be right are saying buy and hold is dead. They're calling it buy and dead, buy and hope. There's some really dumb phrases for it. But the best way for the average person to accumulate wealth is dollar cost average.
You still believe in it?
If you have a proper time frame.
Okay. All right. Short time frame, then what? If you don't?
Don't play the games.
Don't play the game at all.
Yeah.
Okay. All right. The next question is this one. When will interest rates go higher? So pull out your ball. Yancey wants to know. Pull out your crystal ball and answer that one for us all.
Well, I'm going to pull out Bill Gross. He runs PIMCO, and he's the best bond investor, which are sensitive to interest rates. He said it's going to be 3 years. Now, interest rates being where they are now, 1/4% is really problematic because let's say you're 70 years old, you can't keep money safe in the bank. You can't get a good rate on your CDs. So you're 70 and you want safety with your big nugget of money, so you have to take risk with it. For me and you, it helps stimulate the economy because Kron could borrow money cheaply, I could borrow money cheaply. Right. Credit card rates are typically lower when interest rates are lower, but for our senior citizens, it's a big problem. And it looks like 2 to 3 years before the Federal Reserve starts raising interest rates because this economy just isn't creating jobs, and they don't want to stop people from borrowing before jobs are created.
Okay. All right. Well, if you have a question, all you have to do is send Rob an email at rob@robblack.com.